Well, to begin with, I think I believe that saving in a SACCO is one of the best things someone can do if they're employed or they're starting to earn money either from business or whichever other source. First of all, everything that has advantages definitely has disadvantages. So in this video I'm going to explain the advantages of a SACCO and some disadvantages of saving in a SACCO. But I believe that the advantages of saving in a SACCO outweigh the disadvantages of saving in a SACCO. Number one, I think SACCOs are a very good means of mobilizing savings. So if you're starting to earn money or you're employed, you need to start saving right away. And this is something that many people find themselves starting to work and they are not informed on the avenues in which they can save their money for any day or for retirement, for example, or any other target. So I believe SACCOs are a very good method because number one, they earn what we call interest. You save your money on a consistent basis, maybe monthly. If your salary comes every month, most of them are done through check-off. That is, you don't have to have the hassle of transferring the money from your bank, depositing in the SACCO's bank account. The money is just deducted directly from your salary and it is taken to that SACCO's account directly. So that is one of the advantages. The other one, the second advantage, as I said, is the issue of dividends or interest, because you find most of these SACCOs give quite a considerable amount of interest on deposits. If you find anybody giving you an interest rate of about anything over 10 or even 9, that is a very good interest rate, and usually it is not fixed, it changes. And if this usually comes from the amount of money that the SACCO makes. So if the SACCO is able to generate a high amount of profit at the end of the year, then they distribute that money to the members in the form of interest on deposits. So it changes. If management is more efficient, the expenses reduce for running that SACCO, they're able to issue more interest on deposits. Number two, there's what we call dividends. And the moment you become a member of a SACCO, there's the money which is deducted, or you're supposed to pay some money called share capital. This money is your permanent investment in that SACCO. It is not withdrawable, but it is transferable. At the point when you want to leave that SACCO, you withdraw your savings, you can transfer that amount to somebody else at an agreed upon cost or transfer amount. Maybe you could have been told to pay maybe 20,000 or 30,000, whichever. By the time you are leaving, you can get somebody to buy that amount, that one share or two shares, at 30,000, 40,000, whichever, depending on how you agree. It is the same way that shares are traded in the stock exchange. You find you buy a share at maybe 500 shillings. After some time, you're able to sell it at 1,000. It could even go down to maybe 400 shillings. So that is the same way that the share capital is traded for the SACCO. So you can buy as much as you want. If we have willing sellers, you can sell, dispose that amount at a profit when you are leaving. But the beauty of it is that these amounts normally, the dividends on this share capital is usually higher. So you find a SACCO is paying interest rate at an amount of maybe at 10%. It is likely to pay the dividends on share capital at like 15% or even higher. So it is a very good way of earning interest or dividends, earning out of your savings in that SACCO. The advantage number two of SACCOs is the low interest rates. You find that most of these SACCOs, their interest on loans is lower than the banks, and I'll explain the reason. The reason is also why it is also a disadvantage for the SACCOs. The issue is this: if you're employed, for example, you're earning a salary, you have been saving with a SACCO for some time, and you now want a loan, you will be required to bring what we call guarantors. Guarantors means people to step in and pay your loan in the event that you are unable to pay for whatever reason, except death. If you die and you're a member, an active member, you've been paying your loan, your loans are catered by the sinking fund. I'll explain it after this. So if you want a loan, the interest rate is lower. For example, when I was in Harambee, the interest rate per month for the main loans or for the major loans were 1% per month. That is 12% per annum on reducing balance. That was for the major loans, which we call the development loans. We had the school fees loan and the emergency loans. The maximum period for the development loan was 4 years, that is 48 months. And if you take, for example, you want to take like 1 million loan, you needed to have guarantors, at least 2, whose shares or deposits, savings in that circle, including yours, will total to 1 million, the loan you want. So the loan should first of all be fully covered in terms of the deposits those members have and yours. So if maybe you want 1 million shillings, you have deposits of around 400,000. Again, before you take the loan, there was a certain limit. You couldn't take, like you have shares of 100,000, then you take 5 million. It couldn't work. You had to take a maximum of 3 times or 4 times of your shares. If your shares is 250,000, you can take times 4 loan. That is up to 1 million shillings. So if you want 1 million shillings, you have shares of 250,000, you need to look for guarantors, at least 2, who will bridge the gap of 750,000. So at least you get somebody with maybe 500, that comes to 750. You get another one with 250, it comes to 700. You can even take that was a minimum, so you could even bring guarantors with more savings than that loan, the amount of the loan. So that is one of the disadvantages of the SACCO loans, that such that you must bring the guarantors. And you see sometimes in our workplaces, sometimes you want to do your own projects, you find you have to go looking for your colleagues who are members of that SACCO to sign for you a form. Some are not willing, others are willing to help you. So it is a tricky way, but I think it is based on mutual trust, because these are colleagues that you work with. You earn the same amount of salary. You are in the same rank in the employment, in the employer. You can easily sign for him and him to sign for you. So that is the only disadvantage. So again, people will get to know you have taken a loan. Your colleagues will know that you have applied for a loan here. So sometimes people want their financial decisions to be a bit confidential, but that is why with the SACCOs, you must look for guarantors. Then there are advantages that the interest rate ratio is low, as I explained. It is low because that SACCO loan is fully guaranteed by the guarantors. Unlike banks, where you don't need to have those guarantors and shares. So you don't need to have any minimum amount of savings in a bank for you to get a loan. So most of the unsecured loans, they just give against your salary. So that's why the bank's loans are a bit expensive, and they are more riskier even to the bank. That's why the interest rate is a bit higher for the banks, unlike the SACCOs. Because a bank approaches someone who is a business person, they do their normal appraisals, they do their risk calculations, they do their cash flow projections for the business, they look at the ability to pay, among other things. So the person starts paying the loan, and some years down the line is unable to pay for some reason, so the loan goes into default. You go to a lot of problems, and you find the banks have a lot of huge recovery teams, and it's quite a bit tricky for the banks, unlike the SACCOs, whereby I can say the loans are almost, I think they have a 98% risk-free, because the loan is covered by guarantors to begin with. If you fail to pay, they deduct your savings. Then they deduct from your savings. Whatever remains, they attach the guarantors, and then there is no negotiation. The guarantor just sees, because all these people are employed people, they're in payrolls. They just get the SACCO just sends a notification to the employer. please deduct this amount of money from this person, and they don't need to explain. So the employer takes, deducts the money. So you just see something on your payslip. If you go to inquire, you're told you signed this loan some years back for this person, and it's upon you to go and follow up so that he can pay you back. So if it is a bit tricky for the customer, for the member, but for the SACCO, it is good because the loans do not go to, there is very minimal losses. Again, if the person takes a loan and they pass away, that loan is insured by the sinking fund. There's some money which you contribute every month, which is called sinking fund, to a pool, which gets us, in case of death, somebody dies and he has a loan, the money is settled from that pool, that sinking fund. And that money is there's usually an insurance policy taken for the loans with an insurance. For example, when I was in Harambee, it was with CIC insurance. So in case somebody dies, you claim the money from CIC and you refund their next of kin all their savings. So that is the advantage of SACCO, and also the one disadvantage, as I said, for the one for things about guarantors. Yeah. But all in all, if you somebody who is starting to work, you starting to earn some money, I would encourage you to save with a SACCO. It is a win-win situation. The SACCO mostly is on, I would advise people who are starting to earn money to focus on savings and not focus on the loans. Because even when you see the name of that organization, that business model is called a SACCO. It's savings and credit, not credit and savings. So focus more on the savings. And if you're starting to work, give yourself some target. Maybe you are 20 years, you project that you will work for 40 years. Save an amount every month. Maybe you target to have like 10 million by the time you retire. So you can consistently save, like, say, 10,000 per month, or whichever, maybe 20,000 per month. And you focus on that and you remain consistent in it until you will, kidogo kidogo ujaza kibaba. You'll not realize, and you'll be able to live on your salary, reduced net of savings. And that money, sometimes even if you don't save, you may not even realize how you're spending it. Maybe you buy some things which are necessary, some luxuries here and there. So I think it is best to focus on savings. Save some good amount of your salary in a SACCO. You learn dividends, you learn interest. You can take a loan in case of an emergency or something. And that money is very safe. Most of these SACCOs are very stable. They are very stable in terms of finances. Actually, something I can comment, it is, from my experience in SACCOs, it is more difficult for a SACCO to collapse. The big established SACCOs like Police SACCO, Harambee SACCO, Ukulima, Mwalimu, and I'm not marketing for them, but that's a fact. It is very difficult for these SACCOs to collapse as compared to the banks. A bank normally suffers what we call a run on their deposits. Customers rush to withdraw their deposits in case of any negative information. But for SACCOs, you realize it is not easy for you to withdraw. You must give a notice of at least 2 months for you to withdraw. You must bring people to relinquish you from any loans that you've guaranteed. And as long as the SACCOs keep on attracting new members, the government keeps on employing new people joining the SACCO, they can be guaranteed to exist for a very long time. Unlike the banks, which you saw the case of Chase Bank. Which other bank? We have had quite a number of banks which have collapsed in the recent past, which have run into problems. So you can see, generally, SACCOs, the well-established SACCOs, are quite stable, and they rarely, that issue of the run on their deposits cannot happen, and they are quite stable, and your saving is very secured in those SACCOs. And right now we have, I think SASRA is coming out strongly, and the regulation is quite there. So it is a very safe method of saving your money, keeping your money safe for a rainy day, saving for some target, saving for your old age, saving for your retirement. Thank you. I welcome any comments, any questions. Thank you so much.